Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. That's right, your roadmap to financial freedom. Inside, we're going to be discussing things for absolute beginners who never even heard of the stock market or don't know what the stock market is. We're going to teach what is the stock market, what is a stock, what is an index. We're going to teach dive into the ICT concepts. We're going to discuss how to figure out how much you need as an individual to save for your personal retirement. We're going to talk about retirement portfolios. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you. It's dropping on August 6, 2025, which is my birthday and my youngest son's birthday, for $69.99. Yes, $69.99 for all of this here. Mark the date, set it on your calendar, remember it, and I'll see you on August the 6th. Good evening, everybody. I hope you're doing well today. Y'all come on up in here, man. Come on up in here. Come on in the room. Good evening, everybody. Good evening. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it is not your first time tuning into Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Haranya Grande. that's just big spot if you don't hablo Espanol. And like I said in the introduction, this is the Price Action Recap. And this episode of the Price Action Recap is being brought to you by the Smart Money Manuscript. I see that someone in the chat said 5 days. Smart Money Manuscript. 5 days. The time is drawing nigh for the Smart Money Manuscript to drop. I think it's going to be a useful tool for a lot of people. You know how it is when you want to go back and try to figure out where you saw something in a video that Tim talked about. And you got to go back through there and look at these long, drawn out, hour and a half, 2 hour long live streams. And you're trying to find, you just want the nuggets. Tim, I just want the nuggets, man. All I want is the nuggets. I don't want to go through the long, drawn out hour, just all of the going off on your rants and your tangents and you're not sticking to the script and I don't know where you're going because the title just says price action recap, and I just want the gems, man. Give me the gems. The Smart Money Manuscript is going to be a one-stop shop, a concise layout. Let me show you. Give you I don't know why they changed the platform. I was able to give you a full, full to-do sneak peek. I could show you the videos. I could go through the test, let you all take the quiz. We did it. We've done it. Me and the gang, we did it. We did it twice, matter of fact. right? We did it twice, as a matter of fact. And see, they done changed something else. They done changed. Remember when I told y'all they constantly changing stuff? Look at there. I just logged in. I logged in earlier today, right? Because I was working on the course. And then now I log in again. What's new? They change something every single day on this site, man. And it's like, I guess if I started reading this what's new, I would I wouldn't be lost. I wouldn't be lost when I'm trying to figure out how to do the stuff that I used to be able to do if I actually read the what's new. Uh Instead of separate WAPs on the left sidebar for each. Okay, we get into it. What's new? Instead of separate WAPs on the left sidebar for each offer, you will have one WAP where members only see the apps tied to the products they purchase. What do you need to do? Nothing. Your product page link and user access stay the same. The only difference is you'll no longer need to manage multiple WAPs. Okay, I need to start. All right. But I still can't go through it like I used to, right? When I come over here to learn, click on Smart Money Manuscript, right? When I click on the Smart Money Manuscript, it used to say course, configure, and analytics. And if I clicked on course, I could go through the course and take the quizzes and like I could go through it and do the entire course. And then if I clicked on configure, it looked like this, right? Where it's like behind like the what you call it? The not the back page. What do you call it when it's like on the server side? The side that like not the user side, but on the server side. What do you call that? It's not the back page. What else is gonna drive me crazy? Um Back office. Yes. It's like the back office, right? And it's like they but they took that away where I can't like go through the course anymore. But this is a smart money manuscript here. Like when you purchase it, you'll have a course. It'll be a course, right? And you see it has intro. That's this welcome video you see here. Then you go to phase one. Phase one, you have budgeting, right? You got a budgeting video and you got the slides. You can download the slide deck that I'm using. You got the slides below it there. You have a budgeting quiz, right? Once you and everything is set up where you have to go through each module. You can't jump down here and say, "Oh, I want to come down here and go straight to time is king. I want to jump straight down here to the ICT stuff." You can't do that, right? You have to go through. It's a self-paced course. You have to go through everything from the top to the bottom, right? You have to go through each module, right? So you see the welcome video, right? It's 1 minute long, right? The budgeting video is 3 minutes long. Then you have a budgeting quiz. The banking video, right? The banking video, it says 4 minutes. Then you got a banking quiz, right? You got a taxes video, which is 4 minutes. Then you got a taxes quiz, right? So then you go to phase two. Phase two, right? Phase one, the way it's broke down, phase one is the basic information that um, everybody should just be aware of when it comes to your money, right? We looked at the budgeting video the other day, and then we were going to try to take the budgeting quiz, but I can't do that, right? So y'all know what I just thought about? Let me see. I'm going to try something real quick before we get into it. I'm going to try something real quick and see if this will allow me to do what I want to do. Let's see here. Uh, I'm going to see if there's a way. I know I can do it if I just create a link. Let me just create a link where I can uh products, smart money manuscript. Oh, they got people in India, Morocco, Nigeria, Pakistan, all of them blocked on this site. I guess they got too many fraudsters in there because I just went in there and it was like all those places are blocked. Let me see here. Uh Man, they done changed up everything. I'm sorry, y'all. This is like it's totally different now. Everything is like totally different now. So I'm sorry, y'all. Y'all talk amongst yourselves. Oh, I forgot to share the I forgot to share the Zoom link. I'm sorry, y'all. Let me uh let me put the Zoom link up there while I do this. Speaking of Zoom link, right? Zoom link is pinned to the top of the chat. Speaking of Zoom link, for the new members, we because it was somebody that was new that joined the Discord and they were asking where to find the link, right? Um Typically where the channel that I say, hey, we're live in, the link will be right above where I say everybody we're live, the link is directly above that. If the link is not directly above that, it'll say everybody we're live, and it'll be a link next to it to where it'll take you to where the link is. So if you're in a Discord and you be like today, somebody was like, hey, where are you live at? Right. And so where I say, hey, we're live, the link will be directly above that post that says, hey, we're live. And I typically just like it, I don't want like a list of links just being in there. So every day I just delete the one from yesterday and put in a new link right above. So it looked like it's just one link there, right? But it's a new link every time. All right. So again, it'll be right above where it says everyone we're live. And if it's not right above it, it'll say everyone we're live. And it'll be a link taking you to the channel that has the link in it. Right. Sorry for any confusion. Now let me get back to what I was doing. And then we're gonna get into it. Let's see here. Man, they done. They done changed all this up. It's killing me. All right, man. This is totally different. All right, now let me see. Oh my god, this is driving me crazy. This is driving me crazy. All right, let me see here. Okay. Oh man, they it's really this is really driving me crazy how they okay. All right. All right. Yes. What?
Hey Tim.
Yeah.
Hey Jim.
You said what?
Said hello.
What's going on?
Nothing at work.
Okay. All right. I thought I was calling myself doing something. I thought I thought I called myself doing something. All right, y'all. I'm gonna get this. I'm sorry, y'all. Uh, where did it go? Where did it go? Okay, let me try some. Let me try some. Bet people that here for the first time, bet they be like, "What is this guy doing?" It ain't what I ain't tune in for this foolishness. What is he doing? All right. Oh my God. That didn't work. What I was trying to do didn't work. It's saying that it worked. It's saying that it worked. It's showing right there. It's saying that it worked. It's saying that it's right there. Now it knows it's me. It knows it's me. So it's like I tried to trick it, but it knows it's me. So it keep taking me to my back page. Yeah, it knows that it's me. I tried to go in and make like a free link for myself, but it knows that it's me. So when I sign in, it knows me. So it's automatically taking me to the back page instead of letting me go in and instead of letting me go in and just view it. It's making me, oh well, I thought I had a way to go through and do it, but to no avail. I've been I've been yeah, I've been tapped in the head. It's not letting me. I thought I had a workaround, but it is what it is. Say la vie, right? I was using the incognito browser. I was using the incognito browser, and but when I sign into WAP, it knows that it's me. So it's just taking me to my regular dashboard. It's not letting me, you know what I'm saying, have access to the actual what's the name. Oh well, I'm gonna figure something out to be able to do another preview before the 6th. I'm gonna figure something out. All right, let's get into the price action recap. Again, what's up, Empire Traders? If you wasn't here earlier when I said so, anytime I share that we're live inside the Discord, the link to join is directly above that post that says, hey, everybody, we're live. And if the link isn't directly above, like if I did it in another section somewhere for some reason, there will be a link next to, hey, everyone, we're live, with a link taking you to the channel where the link is to pull up inside the Zoom. Right. And the only time there'll be a case where we're doing something and it's not a Zoom link is if I do a pop-up. If I do a pop-up, it's just going to be right there inside the voice channel, and I'll be sharing my screen in the voice channel, and the pop-ups aren't recorded. Right? The pop-ups aren't recorded. And no matter how much y'all beg, from now on, I'm not going to be recording them anymore. Tim, please record it. Tim, please record it. That's the purpose of the pop-up. The purpose of the pop-up is you be there or you be square. Tim, I can't join right now. If you couldn't join right now, you wouldn't be in here saying record it. If you couldn't join right now, you wouldn't be popping in. Tim, I'm at work right now and I can't join. Please record it. No, no more. No more. Matter of fact, I'm gonna go full screen right here. I'm gonna go full screen. This how y'all be at work. Tim, I'm at work right now. Please record it. I can't join. I wanna. No, no more. That's what it's called, the pop-up, for a reason. It's not a go off with your life and I sit here and do it, and then you come back at your convenience when you're sitting at home picking toe jam out in between your toes and eating popcorn and want to look at the replay. No, it's called a pop-up for a reason. How about that? Did price do anything anytime this week that may have caught you off guard? If price did something that caught you off guard this week, caught you off guard today, anytime, it's Friday. So, who we got up in here? The link is pinned to the top of the chat and YouTube. Click on that link, right, and pull up on the Zoom and unmute and say, hey, Tim, I expect the price to do this. Price did that. Let's talk about it. All right. Who we got in here? We got Jim up in here. What's going on, Jim? We got Jada up in here. What's going on, Jada? We got Empire Trading. Why why do you have a S on your thing? Why do you have a S on there? Oh, and other people got their name. So I guess you put that S there. Okay. All right. I just noticed it's like I see names and then the picture is just an S. Okay. So I guess you just want to put a picture of an S there. Maybe your name starts with an S. I'm gonna mind my business. Okay. Um, I see we got Kim over there. What's going on, Kim? We got Valentine. Hola, Valentine. We got Cameron. Oh man, I ain't seen Cameron Smith in a month of Sundays. What's going on, Cameron? Hey, 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 how you doing? Hey, salute you with both hands. Who's seen thin line between love and hate? I salute you with both hands. Remember when Mia went off to the military? Walk. What's going on, Walk? We got here to learn and share up in here. We got Father Legends. What's going on, Father Legends? I ain't seen you in a month of Sundays either. What's going on, Father Legends? Hey, them all the names I see. I see more numbers than I see names, but them all the names that I see. Ain't no need for all the crying and the shock faces and the crying faces and all that right there. Be there or be square. What's going on, Venus? You right on time because we just getting ready to get started. I've been trying. Well, I've been on here for like over 30 minutes, and I've been trying to figure out how I can get the what's the name to let me do like a a, a sneak peek, a sneak preview, right? I've been trying to see how I can get it to do like a sneak preview, and it won't let me do it. Right. So get out the way, Zoom. All right. I don't see anybody put anything in the chat. I don't see anybody say anything. So we gonna look at yeah, sneak preview. You don't know what a sneak preview is? You don't know what a sneak preview is, Venus? Yeah, I was trying to get it so I could do a sneak preview, but it won't let me do a sneak. It won't, it's not acting right. It's playing games with me. Games with me. Yeah, hold on for a second. But it, oh, okay. Ain't like I'm going. Oh, the Smart Money manuscript. Yes, the Smart Money manuscript. Oh, hold on, man. Hey, man. Live. Stop texting me. Live. Stop texting me, man. All right. So I'm put the new week opening gap on there. Boop. I'll just put all the ones from this week. All right. So these are the opening gaps for this week. And this is this week's price action right here. Right. This is this week's price action. If you look at this week's price action, if we squanch the chart up like this right here, right? If we squanch the chart up here, if you are one of the diamond members, make sure I'm in focus here. If you are one of the diamond members, you know that we were looking at trying to find the low. I don't remember what the number looked like. That low, right? Maybe this low. That's gonna be it there. I know it was like 700 and something at the end. That's it. 779.75. I know it was 700 and something at the end. That 800 and something that wasn't there, right? So class participation time. Class participation time. If you are in the YouTube, if you are on YouTube right now, please turn your attention to the top of the chat and click on that Zoom link and come over to Zoom because it is class participation time. During class participation time, we participate via voice. We unmute and we talk. We don't stay on YouTube and type in the chat. Everybody knows what happens if my feelings get hurt. Y'all know I love class participation time. And if no one wants to participate in class participation time, little Timmy Rogers' feelings get hurt. Right? And we don't want that. We don't want little Timmy Rogers' feelings to get hurt, do we? Do we want little Timmy Rogers' feelings to get hurt? Mm-hmm. Class participation time. Okay, I only see a couple people came over to the Zoom. Where's everybody at? Only a couple people popped into the Zoom. Where's everybody at? Ouch! Oh, I felt something in my ribs. 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 Ouch, ouch. Let's see. Do we have? Oh, we got some class participants. Okay. All right. We're not going to end the YouTube today. We got some participants pulled. We got some participation. Some folk pulled up today. All right. Now, looking at this sell side liquidity down here, right? Looking at this sell side liquidity down here. Mind you, today, this is the beginning of the day right here. This is where the day started right here. Right. This is our new day opening gap for today. Right. As you see over here, I don't know if y'all can see the numbering all that well. Right. But if we make the numbers bigger there, you can see that that says new day opening gap 8/1/25. Right. So this is where today's trading started today. All right. So if we lob off today, right? Today has been lobbed off, right? We lobbed off today. And then looking here, right? This low right here is what we marked out today on the tape reading. The tape reading session. I had a brain cramp for a minute. Looking at price. Can you tell me why this sell side liquidity here is the sell side that we identified as the draw on liquidity based off of this price action right here? Why did we identify this as the sell side liquidity? And I'm going to close my eyes and point at the screen, and whoever my finger touches, Seawalk, my finger touched your name. Seawalk, why is this right here the anticipated draw on liquidity? You can give me a simple answer. You can give me a fancy answer, but it needs to be something algorithmic, based on algorithmic principles.
You got your relative equal lows there. That's what I see.
Okay, I got relative equal lows here. Why didn't I pick this one?
Right.
That's true. That's true. I got relative equal lows there, but I got relative equal lows there. So why didn't I pick those relative equal lows? It's much closer.
That's the low of last week.
You said the low of last week. Just look at what's on the screen. Don't try to make nothing up. Okay. Right? Just look at what's on the screen. All right. I don't have a last week's level posted on there.
That's the bottom. I see that's the bottom of the market maker sell model.
Let's go, man. Let's go, Seawalk. Can y'all hear the sounds now? Could y'all hear the? Okay. Let's go, Seawalk. That is the original consolidation for the market maker sell model. Now, Seawalk said, I see that's the bottom of the market maker sell model. That's the same thing, right? The original consolidation for the market maker sell model is going to be the bottom. The original consolidation for the market maker buy model is going to be on the top, right? It's the initial consolidation for a market maker sell model. All right. So as we engineered liquidity down here, right? As we engineered liquidity there, what is the algorithm going to do before taking that liquidity? I'm pointing at Empire Trades. My finger hits your name. What is the algorithm going to do after we engineer this sell side liquidity, right? After we engineer the sell side liquidity, what is the algorithm going to do before engaging that liquidity? Empire Tradings.
What do you mean by before engaging?
Yeah, what is it going to do before engaging? We've engineered the liquidity, right? We've consolidated. We got relative equal lows, right? And since this is the initial consolidation for a market maker sell model, what is the algorithm going to do before taking that liquidity?
Oh, you mean like manipulate, like to the upside and then coming back down? Or what are you talking about?
Let's go. Even though he guessing, let's go, man. It's going to manipulate in the opposite direction, take out some buy side liquidity that it engineered at a time in the past, and then it's going to come back and engage that sell side liquidity that it engineered here, right? And what concept is the driving force behind this said market maker sell model? Shiny baby. What's the driving force behind this market maker sell model? What's the driving concept behind this market maker sell model?
I don't know.
You want to phone a friend?
Yeah, I have no clue.
No clue. Somebody who has been on here in the last week every day. What's the concept that's driving the market maker buy model?
Here to learn and share. Put it in the chat twice.
I can't hear with my ears. My eyes. I
Okay.
can't hear with my
That's the
eyes.
power of 3: accumulate, manipulate, and distribute.
Let's go, man. The power of 3 is the driving force behind the market maker models, right? And for those who don't know, the power of 3 is the noun, right? This is the thing. This is the person, place, or thing, right? There's a verb that drives this right here. Actually, you know what I'm saying? 3 verbs: accumulation, manipulation, and distribution. So AMD is the verb that drives the vehicle, which is the power of 3, right? The market maker model and everything about the ICT concepts revolve around the power of 3, right? Why is that? Because IPTA, for those who don't know, IPTA is going to engineer liquidity, right? It's going to engineer liquidity, no matter how it engineers it. Let's look at it, right? Right. IPTA is going to engineer liquidity. What is this fractal of price that I'm circling right here? Right. Anybody can call out. What is this? What is price doing at this time right here while it's engineering this liquidity? What is it doing?
Consolidating.
It's consolidating, right? Price is consolidating. Let's put the meat back on the bone so we can see. Price is consolidating, right? Now, when price is consolidating here, okay, and then price, we take off up there, like we take off up there right there. What is price doing right here? What is that right there? What do we call that? This entire move here. What is this entire move called?
Expansion.
Expansion. Right. Right. Then we drop back down right here. Right. We expanded there. Right. And then we dropped back down that expansion back into this range here. What is that? What is that expansion back into the range called?
Retracement.
Retracement. Right. And then, right, we come here and then we drop down below that low. Right. And what do we do below lows? Right.
Yeah. Distribution.
Yeah. Yes, we deliver
Okay.
our positions there and we distribute them there. So once we deliver it to there, we distribute below an old low. Right. So consolidation, expansion, retracement, and deliver. Right. If we consolidate here and we expand up, we're accumulating here. And when we expand up, we're manipulating. Why we're manipulating? Because we actually want to come here, right? So we consolidate, accumulate, we expand up, right? Manipulate, and then we come down and deliver, right? Down here, distribute, accumulation, manipulation, distribution is the driving force behind curd, surd, no matter which one it is. Accumulation, manipulation, distribution is the driving force behind everything dealing with IPTA. right? Why is that? Because the algorithm is driven by liquidity, right? The algorithm is driven by liquidity. But since IPTA is moving metric tons and we out here moving dime bags, IPTA can't just get all their positions off at one spot. So they have to engineer liquidity, right? They got to engineer liquidity, manipulate the market to some liquidity that it engineered before so that it can come back down to the liquidity that it just engineered, right? And that's how it works. Accumulation, manipulation, and distribution all throughout everything you see, right? And then as we see here today, we had a very low resistance liquidity run into the sell side here, right? And looking at this market maker sell model, right? Does the sell side of the curve, does the sell side of the curve look like the buy side of the curve in this case right here? Right? Meaning like all these areas, all these different areas of like accumulation, right? Does it look like that on the sell side of the curve? Do those look exactly the same? Do they look like almost mirror images of each other?
No, they're different.
They different, right? They different. So looking at this right here, what type of environment would you say that price was in on the way up right there? Cameron.
It's rising. It's going up. I don't.
What type of environment is it? Is it low resistance or high resistance? I'm gonna give
high. It's high.
All right, I'm gonna give you a little bit more because I know you ain't gang that be in there with me every day.
I know.
So I'll give you a little bit more. Yeah, high resistance. High resistance, right? It's the condition, the environment is a high resistance conditions going up, right? So this side right here, does this look high resistance or low resistance, Cameron?
That's low.
That's low resistance. Very good. Shout out Cameron for putting up with the hard-hitting answers right now. I didn't touch nobody. All right. Lump, my finger touched you. Why, looking at price, why was this right here such a low resistance liquidity run back to the sell side liquidity?
Probably was a macro time or something like that, or the beginning of something.
Just looking at price. Just look, we ain't trying to figure out like the time frames and that. We're just looking at price. Why is this such a low resistance liquidity run all the way back to the sell side, where from the top to the bottom is over 1,000 points?
You see why I went so fast?
Why is it such a low resistance liquidity run? Why is it such a low resistance liquidity?
Probably because with all that consolidation,
it ain't probably. Okay. Tell me what you see in the chart. Tell me what you see in the chart.
I see a bunch of balanced price ranges going up that way. So if it's balanced, it don't have to stop at no imbalances.
Okay. And if it's a bunch of balanced price ranges going on the way up, what does that mean? What does that mean about all of this right here? That is what? It's been what?
Delivered.
It need to be a word in front of that.
Efficiently. That's what you be saying.
Yes.
Efficiently delivered. Yeah.
All of this right here has been efficiently delivered. Meaning, shout out Lump coming through with the hard hitting answer, even though he ain't really know it. Yeah,
man, this stuff work, man. Many moves, man.
So, for anybody who don't know what efficiently delivered is, right? I'm not going to write that out because it's 2 letters and it's going to look weird on the screen. But efficiently delivered means that we're offering buy side delivery and sell side delivery, right? And as you can, when we're consolidating, it's very easy to see that we're efficiently delivered, right? But when we move up, that's buy side delivery, that's sell side delivery, right? When we come up here, buy side delivery, sell side, we got a bunch of buy side. When we come up here, buy side and sell side. Everything here is efficiently delivered. We're offering buy side and sell side, right? And every time we reach it, like all of these areas, like Slump said, when we leave this area, that's a balanced price range, right? All of this right here, we leave that area, balanced price range. All this delivery, balanced price range. We sweep liquidity, right? Balanced price range. We're offering buy side and sell side all the way up, right? Then we get this big expansion up of just buy side delivery. Then we have a big expansion down of sell side delivery. So now we've offered buy side and sell side. We're not consolidating like here, but we offered buy side delivery and sell side delivery. So now all of this right here is a balanced price range. It's all efficiently delivered, right? So when we come to this side, there's no reason to pause a whole lot, getting back down to the liquidity, because all of this has been efficiently delivered. And like Lumpy said, it don't have to go back to any imbalances. Everything is efficient. So the only thing it needs to do is go back to the liquidity. Come on, man. This stuff really freaking works, man. This stuff really works. Stop playing. Okay. So like we said today, we came in and on the stream, we identify this as the likely draw on liquidity, right? Because we said, hey, at first I was like, oh, that's kind of far down there. Then I stretched out. I said, oh, no, that's really not that far. That's not outside the realm of what it can do in one day. So we can hit that today, right? And that was that 22,779 and 3/4. And if we come here and look, right, this right here is the 4:45 candle. That's the last candle. That's the last 15-minute candle of the day on Friday. Look at where price went to for the day. Right there. It went 775 even. It went 4 3/4 points below. Less than 5 handles below that point that was starting at the start of the day here, all the way down there, right? There's no way, let me repeat, no way that a used to be little nappy head boy, but now a nappy head old man from Fort Lauderdale, Florida, can pick a price on a price chart of 22,779 and 75.75 and say, this is where the algorithm should deliver to. And then it come and do it within 5 points. Ain't no way that I can do that if there was no algorithm, right? If there was no algorithm. And that's a fact, Jack. That's the double truth, Roof.
Except for the part about your hair. You ain't got the nappy hair. I took that.
Yeah, I'll give you that one. That no truer words have been spoken. All right, man. So looking at today, looking at the weeks, right, looking at this week overall. Looking at the week overall, okay? Let's go. What were we talking about? What was the initial thing we was talking about? AMD, right? Power of 3, right? That's the first thing we was talking about. Okay. Look at the week. Right there, consolidation, right? Okay. Right here. Expansion, right? Right. Now, when we retrace back into this expansion, we trade all the way out the other end of it. Right? What do we call that right there? When we retrace, but we retrace all the way beyond the other end. What do we call that right there? Anybody?
Reversal.
Reversal, right? Come down, get a reversal, and then we trade back up into that range here. We come down, come back up into that breaker. Okay, right here. See, came there. Trade right back up into that breaker there. Right. What do we call that right there? Anybody?
Retrace.
A retrace. And then, as we said before, when we come back down to the old low, that's delivery. Right. Now,
Hey, hold on. One question. Once that reversal went down, that's what made that breaker over there.
yes, once we traded
Yes.
here, that made that breaker there. Yes.
Okay. All right.
Once we traded down there, that made a breaker, right? Because we came here, came near, and came near, right? That's your breaker there. Right. So now that we look at that in that sense, I don't know what's what. So I'm just gonna do it like this right here. Okay. Now that we're looking at it like that right there, in a sense of Courage, third, I don't remember which one it was, because remember before we looked at consolidation, expansion, retracement, deliver, right? And we said that was ran by AMD or the power of 3, right? Now we're looking at this one, right? We got consolidation, right? What are we doing? We're engineering liquidity. We're accumulating, right? We got expansion, right? We got expansion to the upside, right? Where's the draw on liquidity? Down here, right? Manipulation, right? Then we come down to that liquidity distribution, right? So no matter if it's this one or if it's this one, right? We got accumulation, manipulation, and distribution in the midst, right? And what is the most important thing to be able to identify in the power of 3? What do you want to be able to identify, Stevie? What do you want to be able to identify? Where do you want to say, like, okay, I know what that is, I'm ready to go? Stevie.
The manipulation.
You asking or you telling?
I'm telling.
Don't sound like you are, but I still give you the horn, because it don't sound manipulation. So you want to be able to identify the manipulation leg, right? Why do we want to be able to identify the manipulation leg? That's going to afford us the best possibility to participate in the distribution leg, right? We don't want to participate in the accumulation phase, right? We just want to identify the manipulation phase so that we know when to enter the distribution phase.
Tim, I got a question.
I got an answer.
Does the power of 3, does that happen every week?
The power of 3, now it's not going to be a power of 3 week every week. It's not going to be a power of 3 day every day, but the power of 3 happens every week, meaning the weekly time frame you may not be able to identify a clear power of 3 on that weekly time frame. But during that week, the power of 3 happened on some time frame.
So does the power of 3, does it happen every month?
It happens every month. It happens every day. It happens all the time, right? That's how the candles are made. But the algorithm don't care nothing about our man-made stops. The algorithm don't care about it, just understands time and price. So it can combine that power of 3 over 2 weeks. It can combine it, and it can do it in one day. It can combine it over 2 sessions. It can, you see what I'm saying? The power of 3, when you're looking at price, you have to be able to identify where are we in price to understand when the power of 3 is playing out. But the problem we get stuck in, like you just said, does the power of 3 happen every week? We get stuck in trying to fit it into the mold where we want to happen, where we want it to happen. We want to look and say, okay, it's going to happen every week, so I'm expecting the accumulation, manipulation, distribution every single week. It's not going to work like that, because how many times have we come on here and we say, hey, looking at this week, is this the power of 3 over this week? And so many times it's been no. Why? Because we don't have a clear accumulation, manipulation, and distribution across that week. You see what I'm saying? But during that week, there's clear examples of the power of 3 happening during that week. It might have happened on Monday and Tuesday, but the rest of the week was just blah. It might have happened just on Wednesday. It might, you know what I'm saying? But the power of 3 is in there. It's just not a power of 3 week, right? That's what we fall victim to thinking, because we see a weekly candle. And let me explain, and hopefully I can explain this will clear it up a little bit better for you here. We have the issue of saying we see a weekly candle, and just because it looks like this, we say, oh, that's a power of 3 week, because it opened, made a high, made a low, and it closed near the low. And we automatically say that's a power of 3 week, but it doesn't have to be a power of 3 week just because it made a down closed candle like that. Because if this entire week wasn't made of accumulation, manipulation, and distribution, that's not a power of 3 week. That's just a down closed candle. Just like if the algorithm, if it doesn't align with the narrative of what price trying to do, this right here doesn't have to be a bullish breaker, right? Just because it formed the pattern. You see what I'm saying? The pattern is formed, right? But if it doesn't align with the narrative of what the algorithm is trying to do, this won't be used as a bullish breaker. The algorithm will just eat through it and come down here and do something here, then go back up and then come back and use that as a bullish breaker, right? But it's like we get so accustomed to looking at patterns that we try to force the patterns inside the narrative that we want it to fit in. But we have to allow price to show us the what it's actually doing. That's why I say you want to learn how to identify the manipulation, right? And when you learn how to identify the manipulation, right, when you're looking at price, right, when you're looking at price and you see that price we're in a buy program, right? We're in a buy program up to here, right? And then you see price, right, accumulating here, and you see we have a drop into the sell side and then a quick displacement up into the buy side, right? Followed by a quick displacement down, taking that sell side out again, right? What signature do we call that? What do we call this right here? Right? What do we call that move there? Anybody?
Wig snatcher.
The wig snatcher, right? The wig snatcher. So the wig snatcher, it helps you to identify that this move here, that's the manipulation, right? Why is that? Because we're in a premium. Okay, we're in a premium. We take out sell side, right? We take out sell side, and then we immediately reverse and take out buy side, right? So when we take out sell side, right, we force short sellers in and engineer more buy side liquidity, right? We immediately reverse and take that buy side liquidity out. When we take that buy side liquidity out, we take these traders out who went short, and then we force buyers into the market and engineer more sell side liquidity, right? Now we're in a premium. IPTA don't buy in a premium. They sell in a premium. So when these traders are being forced into the market, IPTA is going short because they're selling to willing buyers, right? And then when IPTA collects enough short positions, the market immediately rips off and takes those buyers back out, punishing them, right? Take them buyers back out, punishing them. And so now that they've been punished, right, and we tap this sell side, we retrace back in there into that breaker. That breaker's job is to stop anybody that's trapped from being able to mitigate their losses, right? Breaker blocks and mitigation blocks are designed to stop traders from being able to mitigate their losses. So when we trade back up, we barely touch into that breaker right there, right? And then we start our descent down, right? So this right here, you know, that right there is going to be a ITC bearish breaker because we've identified this. As soon as we see this move here and we're in the premium, right? We identify this move right here as manipulation. And so now we're anticipating price to start to come back. We're going to be watching for signatures for price to come back down, right? If you have nothing to look to the left and say, okay, we've manipulated the lows, we're blasting above the highs, I can anticipate us to go to this higher time frame PDub rate. And that will be my anticipatory reactionary point. If you can't look to the left and get an anticipatory reactionary point, what can you use to help you get a algorithmic point of an anticipatory reactionary point? Kim, what tool can you use when you can't look to the left because you're at all-time highs? What tool can you use?
The fib using standard deviations.
And how are we just gonna yes, let me give you to the fib. And what are we gonna, how are we gonna anchor the fib? Are we just gonna willy-nilly pick something to anchor it to? What are we gonna use to anchor our fib? Venus. What are we going to use to help us anchor our fib? We're going to look for what? To help us anchor our fib. We're going to anchor our fib based off of what? Venus. Hello. Hello. Is the mic working? Venus left me high and dry, y'all. Venus playing like she can't talk right now. Who want to take it? Who want to take it? What are we going to look for to help us anchor our fib? We're looking for what? We're looking for evidence of what? Is anybody there? Is anybody? I don't have my chat open, so y'all need to talk to me.
I know
Yes.
you're gonna anchor it off the 3 p.m. low to the 2 p.m. high.
But what are we using? What are we use like it ain't always gonna be a 3 p.m. low to 2 p.m. high. What are we using? What are we using? What are we using to figure this out? What are we looking for to figure this out? We're looking for evidence of what?
You got me on that.
Remember when you was bad in school? Where did you have to go when you was back in the 80s and the 90s? When you was bad in school and they ain't send you home, but it was a place you had to go inside school. What did they call that?
Internal liquidity. I mean, internal suspension, but what you looking for? Internal. Let me see.
It's the same letters. You had to go to IS.
Yeah, I don't know the S part. Internal. But when you stretch, you just go to the highs.
Institutional sponsorship, if I can talk.
Institutional sponsorship. Yes, we're looking for evidence of institutional sponsorship, but yes, because the evidence of the institutional sponsorship gives us that, but we're looking for the institutional structure, right? The institutional market structure, right? We're looking for, we got our institutional sponsorship where we displace, we move to the discount, we move to liquidity, right? And then once we get down there, right, we form our little man. He's ugly today, right? I bullet like the elephant man today, but we got our swing low, our swing low, and our swing low, right? He's very ugly today, right? But we got our institutional market structure, and the lowest swing low inside our institutional market structure, we go from the lowest swing low back to the swing high prior to it, and then we project up, right? And then that's how we anchor our fib based off of the institutional structure, the institutional market structure, right? We anchor our fib because the institutional sponsorship has stepped in the building and we have evidence of institutional market structure so that we can utilize this particular swing low or this particular swing high to tell us how far will the algorithm go. And we can do it based off of standard deviations, right? We can do it based off of standard deviations. So when you have nothing to look for over here, there's no high, you can say, okay, price has moved a half a standard deviation, right? Price has moved a full standard deviation. And once we get to these standard deviation points, and then we get a signature that price is breaking down, right? Now, once we get up here, right? Once we get up here and price reaches our standard deviation mark, in this case, it only went one standard deviation. If you can't see here, that says -1, right? It went our standard deviation mark. We dropped down, right? We traded here, right? We dropped down, took out that low right there. We traded there and we dropped down and took out that low right there. Okay. So now dropping down here, that right there was our possible smart money reversal, right? Right. We got a break in market structure there, right? Why? That makes that our possible smart money reversal because we've got a bearish break in market structure. When we trade here and then trade back below this low, right? What is this and what does it confirm? Who hasn't spoken? Jada. Jim, Jada. I ain't heard from y'all. Either one of y'all take it. What is this? Once we trade up here and then take out that low, what do we know this is? And what does it confirm?
Are we talking about the institutional sponsorship you talked about yesterday? Or
we came here.
once you've taken out,
yeah, we came here
yes.
to a standard deviation. We trade back down, get a bearish break in market structure. At this time, we're saying, hey, this is possibly my smart money reversal. And then when price trades up here and then breaks this low there, what is this and what does it confirm?
Oh,
is that change in state of delivery?
It does confirm change state and delivery, yeah, all of that. But what is it and what does it confirm? Remember, listen to what I'm saying.
Put an answer for us.
Can we call that low risk buy?
Might as well put they're putting the answers there, so they should take it.
Okay, what is it?
That's your it looks like an order block, but you call it your low risk buy?
A low risk what?
Buy.
You mean sell?
Or low risk something you call it. What is it?
Yeah, this is a sell. We're selling.
Okay,
here.
all right, low risk sell.
Low risk sell, correct. And the low risk sell confirms what?
But we on the right side of the model.
High is protected.
No. What do we say we thought this was?
Smart money reversal.
We at the break in market structure, we are anticipating this to be the smart money reversal.
Oh, okay, you say that's confirming this reversal. Okay.
Yes, because we've come to a anticipatory reactionary point and got a bearish break in market structure, right? So we're anticipating that to be the smart money reversal. This low risk sell, once we trade up, don't take out that high and then break structure again, that says that's the low risk short, and that confirms that that's the smart money reversal. And we now know what? That we are anybody. And we now
on the right side of the model, right?
Right. We're on the right side of a market maker sell model. And now that we know that we're on the right side of a market maker sell model, we are looking for opportunities to do what? Anybody? Hot sale. Very good. Let me give everybody some horns. Everybody that participated on that, you got horns. Okay. So now that we identified that we're on the right side of the market maker sell model and we're looking for reasons to sell, right? Right. We all tracking. We all got that, right? We come here. Now let's map out some time. I'm just gonna go ahead and put time into it to help us. We're just gonna let me see. I'll just go to the end of the day, but I don't feel like breaking them up. Well, I'll break them up. All right. So this is right. This is a London session. This is a New York session, and this is a New York afternoon session. Right. So remember, time and price. Time and price, the most important thing. So coming into right I said session, but kill zone. London kill zone, New York AM kill zone, New York PM kill zone. All right. So coming into this kill zone right here, right? We have at this point here, right, going into the kill zone, we're anticipating that this is the smart money reversal, right? We're anticipating that this is the smart money reversal. So if we're anticipating this is a smart money reversal, okay, coming into this kill zone right here, right, we see price drop down, taking out sell side, and then immediately reverse and take out buy side, right? So we're in a premium. We're thinking that this is the smart money reversal. So once we come up, so if we drop down, take out the sell side, take off, take out the buy side, right? We're now anticipating this to be what? A bullish Judas swing or a wig snatcher? Anybody? Are we anticipating this to be the smart money reversal coming into the new kill zone? We see price drop down and take off. Are we anticipating this to be a bullish Judas swing or a wig snatcher? Anybody? Ain't nobody gonna say nothing. Hello.
Sorry, say that again.
We're anticipating this to be the smart money reversal. We're
Yes.
coming into a new kill zone, and we
Yes.
see price drop down, take out sell side, and then immediately reverse and take out buy side.
Sorry.
Are we anticipating this to be a bullish Judas swing or a wig snatcher?
Judas
Wig
swing.
snatcher.
Wig snatcher. Whoever said
Wig
wig
snatcher.
snatcher is correct.
Yeah.
Right. Why are we anticipating it to be a bullish Judas swing, Lump? Why would we anticipate the bullish Judas swing? If we're
I was just guessing.
Okay. All right. So let's walk through why we're not then. Right. We're in a premium. We've come to an anticipatory reactionary point. We've got a bearish break in market structure. Right. So we got a bearish break in market structure at an anticipatory reactionary point. So that's making us think that this is the smart money reversal. If we're anticipating this to be the smart money reversal, we're already anticipating that we're on the right side of the market maker sell model, right? Once we get the smart money, the low risk short, that confirms that we're on the right side. But at this time, we're anticipating that we're on the right side. So if we're anticipating we're on the right side, right, we're looking for reasons to sell. Coming into a new kill zone, we see the market take out sell side, then immediately reverse and take out buy side, right? So since we're in a premium, we're not looking for a bullish Judas swing because we don't buy in premiums. If we're in a premium, we don't want to see a bullish Judas swing, right? So we're anticipating this to be a wig snatcher. And if this turns out to be the wig snatcher trading below this low, it's going to confirm that that is our low risk short, and that is our smart money reversal, right? Y'all ever heard me say when we be trading and I say if we take out that low, that's going to confirm that that's the low risk short, and that's our smart money reversal. Or if we take out God dog it, get out of the way. Or if we take out that high, that's going to confirm that this is the low risk buy, and that's the smart money reversal. Why am I saying that? Because of stuff just like this. We've come to an anticipatory reactionary point. We've got a bullish or bearish break in market structure, right? The wig snatcher is looking like it's setting up, right? And if the wig snatcher it plays out, that lets you know you're on the right side of the market maker sell model. But I said all that to say, right, coming into a new kill zone, time is king. Remember, time is king. Coming into a new kill zone, right, we see what appears to be the wig snatcher setting up. So at this point, we have identified this is the manipulation happening, right? Remember when I said you want to get good at identifying the manipulation. We have just identified, right? We took out sell side, then immediately took out buy side. This is manipulation. So at this point, no matter how you trade, right? No matter how you trade, at this point, you can start to look for entry opportunities, right? If you identify this is the manipulation, right? Once we come down here and we close below these candles right here, these are the highest up close candles there. Once we close below these candles here, you can go short as soon as we trade back into them, or you can go short as soon as, yes, as soon as this candle opens, you can go short there. Why? Because you know this is your change in the state of delivery, because we've manipulated there, the damage is done, right? And we've created a change in the state of delivery after the damage is done. We're failing to take that high back out, right? Then you say, okay, I don't trade like that, Tim, right? As we drop down on this 5-minute time frame right there, right? As soon as we close here, right? You can go short as soon as we close below there. You don't have to wait for retracement. Why? Because now you're anticipating a bearish breaker to form, right? Why? Because you identified that as the manipulation. Yes, if you just go short as soon as this candle opens, yes, the safe stop is up here. That's a long way, right? The safe stop is up there, right? That's the safe stop. But you have other places you can mitigate with lower losses, right? You got other places you can mitigate with lower losses. What's some place you can put your stop to mitigate with lower losses, right? This right here is the first fair value gap that we created as we took out price. You could say, okay, if this is strong, we should not trade back above that. So when you go short there, you can put your stop above there, right? You say, okay, we got these all these fair value gaps here, right? All these right here, we got all these breakaway gaps. You can say, okay, if price is strong, right, coming into this bearish breaker right there, I'm just putting my stop right above the high of the breaker, right? I'm just putting my stop above the high of the breaker because we got all this displacement. If price is really strong, we should not trade back above the breaker. You can choose to mitigate your loss how you want to, but like we know, the safe stop is always above the swing high that has done the damage, or below the swing low that has done the damage, right? So you get good at identifying the manipulation, then you can choose how you want to engage, right? If you're a type of person that is willing to drop down to a 1-minute time frame, right? Let's chop some of this off. If you're willing to drop down to a 1-minute time frame, right? Once this is our, at this point here is when we're dropping down, right? So soon as this candle, we wake up there, that candle came down and closed there. That's when we're dropping down here at 8:35. We're dropping down, right? Because now we've gotten, we've gotten what we want to see. So at 8:35, right, we drop down, and we see here this candle opens up. We go up, right? Don't take out the high, right? Trade back down, right? There's nothing here that's like just tempting me to buy on like the 1-minute time frame, right? So nothing on the 1-minute time frame in this case right here is just saying, hey, just buy me in this area, right? Nothing on here is just saying buy me in this area. On the 5-minute, like I said, you can use those different ways to engage with price. But right here, nothing about this price action here after we made that move there. Nothing inside here is giving anything. This is just a whole bunch of high resistance, right? There's a whole bunch of high resistance there. There's nothing that's saying buy anything in there. I mean, sell anything in there. I'm sorry. Sell anything in there. And we drop down there. And here we do get like a retracement there, right? We do get a retracement here back into that, right? After leaving this balanced price range. So on the, if you drop to the 1 minute time frame, you have your entry here, and that would have been on a 926 candle right there, on the 926 candle right there. And then on the 5 minute, that right there would have been a little bit better than this entry here of entering after closing below there, right? That would have gave you a little bit better of an entry right there, but nothing else on there is like super clear. But understanding where the manipulation is taking place, it gives you an opportunity to go in and look for algorithmic signatures to say, okay, I can trust this order block. I can trust this SIBI. I can trust this inversion fair value gap. I can trust this breaker. I can trust, because you've identified the manipulation, right? You've identified the manipulation in the sense of the accumulation, manipulation, and now you're getting involved on the distribution leg. I think that's all I got, man. Does it make sense?
Yeah, it
Yes,
makes
thank
sense.
you.
Hey, so after the wig snatcher snatched liquidity on both sides and set that new high, right? And what that's making a new price leg once you break that other low going down as far as being bearish. The one that you were showing earlier. When you say that low risk sell, I know you talked for a long time, but
You talk about when we was, you
as
talk
soon
about
as
when
we
we was
had
here.
after the yeah, right there. When the Judas swept liquidity on the bottom and the top and set that new high, and then I guess
Dropped
it's
down,
yeah,
went
right
down.
there. And then it's setting the high at a new price leg, right?
Yeah, for the
Okay.
bear. Yeah, when we dropping
Yeah.
down like this right here. Yeah.
Yeah. All right, I got you. Okay. Now you see what happened when keeping it real goes the right way? When I said I was guessing. You learned something.
But yeah, that's it. You drop down, you go up, right? Because when you drop down below these lows, right, you creating a liquidity pool, right? And then we go up above the highs, you create a liquidity pool, so you make a bullish dealing range. But then you turn right back around and you take out that low, right? So now you're creating a new liquidity pool, and now this right here, now you got a bearish dealing range that you just created here, right?
Yeah.
And so, and you see how right when we'll talk about on the higher time frame how we had a low resistance liquidity run. See how we cut down like through butter. If we look over here, right, all of this right here is very efficiently delivered. See, we just going primarily going up, but see all these overlapping candles going up right there. All of that is very efficient delivery. Got a bunch of overlapping candles, right? And but with these overlapping candles, we're only offering buy side. So when we come back and offer the sell side, we just cut straight through it, right? So now cutting straight through it, now you know that this right here is a balanced price range. So we're not looking for price to come all the way back to the premium of the entire leg. Why? Because we just cut through a balanced price range. So we're looking for this balanced price range to be used as resistance. And then what do we have in confluence with this balanced price range? What PD array do we have as confluence with this balanced price range right here as we trade back up here?
You're talking about the opening gap or another one in there that I don't see?
I knew they
okay. Knew they opened the gap.
Yep. We drop back down, come up to the high of the new day opening gap, and then we drop back down to the new week opening gap. Right. And then let's go in here. Let's go in here and see if our mind's gonna get blown real quick. Let's do some more Fibonacci magic and see if our mind's gonna get blown.
Are you doing Event Horizon?
So we come here, go Event Horizon, right? What do we do here? We drop down 25%, respect that, retrace back up to the high of that gap, then drop down back to the other side, right? And then as we was coming down, pause that 25%, stop that 75%, trade it back up into a fair value gap at the lower quadrant, drop down to the new week opening gap, trade it back up to event horizon, and then drop back down. Right. This stuff worked for real, man. Y'all better start studying, boy. I'm telling you, boy, this stuff right here. Hey, man, that's all I got. Do anybody got anything for me before we go?
Yeah,
I'm
Tim.
hungry. I think my son done cooked one piece of salmon. It smelled good out there, but all I saw was one piece of salmon in the sink. I heard somebody call my name. Who that was?
Yeah, Tim. Yeah. Far as the low risk buy and the low risk sell, price has to break market structure to create that.
Price gonna break market structure when it's creating the smart money reversal, right? So when you get your smart money, you identify, you anticipate it being a smart money reversal once we get that bearish break in market structure, right? So once we get that bearish or bullish break in market structure, now we're saying, okay, that's our potential smart money reversal, right? And that's how I look on the opposite end, right? We're anticipating that to be the smart money reversal. So when we trade, because we traded down and got that break in market structure, right? And that's the opposite end. We traded up and got that break in market structure. Okay. So we're anticipating that to be the smart money reversal. So since we're anticipating to be the smart money reversal, right now, remember, you're not always going to have like all the stages, because it can just be a low resistance run like this, just take off, where we don't have a whole lot of areas of redistribution over here, right? It's like we're just melting off. It's not like one of the market maker models where you got accumulation, distribution, accumulation, distribution, accumulation, distribution. You know what I'm saying? It don't be like perfectly mirrored. It just be like because we got low resistance here, we got low resistance there. We can kind of shoot through some of the stages, right? But once we identify that we're anticipating this to be a smart money reversal, now we're looking for a low risk short or a low risk buy, where we drop down into a discount to buy, and it's a low risk buy because this is the least amount of risk that you're going to put on in the sense of completing this market maker model. This is the least amount of risk you're ever going to encounter, right? So we're looking for that low risk sale in this case. And with the vehicle of time and price, when we put time and price in there, right, now coming into this kill zone, right, the kill zones are the time where we anticipate the algorithmic principles to play out. That's how it's designed. It is, we got windows of time where we anticipate this stuff to play out. So going into this kill zone, if we identify this manipulation right at the point where we're anticipating a low risk short, right? If you are a turtle soup trader, right? Let's talk about turtle soup traders for a second, right? If you are a turtle soup trader, okay, as soon as price trades above this high right here, you can go short there as soon as it trades above this high right there. And why is that? Because if we look over here, when we went up here, right, and reached our anticipatory reactionary point, right? We came down, right? Created an inversion fair value gap. We created a bearish fair value gap, and we created a change in the state of delivery, and we traded back up into the bearish fair value gap, back up into the inversion fair value gap, and then we continued down, giving us a break in market structure. So we have signatures showing that the damage has been done up here, and there's no reason to come back above that high. There's no reason to come back above this high. Okay, so you can go short as soon as we trade above that high. You can go short right there and trust that you're not going to go above that high. And of course, we know the safe stop is above the swing high at the top, but you can say, hey, I got a high right there that we should not touch. That's more risky, right? That's more aggressive, should I say? I ain't gonna say risky. That's more aggressive with your stop, and then the safe stop is up there. Okay, and that's how you can trade. You can trade like with a turtle soup like that, because the damage, you can identify that the damage has been done based off algorithmic signatures, not just guessing. Remember, we said we came to an anticipatory reactionary point, right? Inversion fair value gap, type of change in the state of delivery, right? We got an actual change in the state of delivery. Okay, retrace back up into the inversion fair value gap, retrace back up into the SIBI, then we can't come back down and get a break in market structure, right? So we got a true change in the state of delivery at a anticipatory reactionary point, and then we get manipulation that looks to be like the wig snatcher. So you can go short there, right? That's how, and that it's all a part of looking at the signatures and saying, okay, coming into a kill zone, I might then find this as manipulation, because price, I'm anticipating price to draw back down. Even if you weren't looking at the lows way down there, right? What's below us, right? What is below us, right? I'm gonna point this out, and then that's gonna be it, right? You see, we got the new week opening gap, right? That's the 28th, right? We got
higher time frame PDA,
we got
PD raise.
we got the 29th. So we got the 28th, we got the 29th, we got the 30th, which wasn't a gap, it was just an open. We got the 31st, right? So what are all of these right here that I just identified? All of these right here, from the 28th, 29th, 30th, and 31st.
Higher time frame ARPs.
No, just what are they? What are they?
Oh, yeah, PD raise.
Opening gap.
The new week and new day and new week opening gaps, and it's for the entire week, right? So we got all of the new week and new day opening gaps for the entire week. They're all below price. What is a strong magnet on price? A cluster of new week and new day opening gaps. And we got every new week and new week and new week. We got every gap for this week below price right now. So we've reached the anticipatory reactionary point. We got a bearish break in market structure, and we got a huge magnet sitting below price, right? So we're anticipating price to go down because we've got a break in we got a break in market structure at an anticipatory reactionary point. So even if you're not looking all the way down here at the opposite end down here, right? You got a huge magnet down here where you got the new day opening gap, and we got a cluster of new day and new week right here. All of these are bunched up together, right? We got Monday, Tuesday, when we got, you know what I'm saying? We got a bunch of them right inside here together, right? And then as you see, as price dropped, right, we dropped down, we blew through this one here, right? We saw it was the upper quadrant of the event horizon, went back to the high of it, used it as resistance, dropped back down to the cluster, went back to event horizon, then dropped below the cluster, went back to consequent encroachment, dropped down once again, touched the low of the cluster, right? And then we came over here like the end of the day right here, right? And did some wickety wickerson right there. See how we wick back up, but what do we wick back up to? Back up to that cluster right there without taking out that high. You see what I'm saying? So these clusters of new week opening gaps and new day opening gaps, those are magnets on price. So once you identify, hey, this is possible smart money reversal, you're looking at different signatures that can draw price towards it to help support your thesis of, okay, this smart money reversal, we should be looking for reasons to sell. And then once you get the confirmation, right, sometime the confirmation, you don't get a chance to participate like this right here. Right, that confirmation, right? Not many people participated right here, right? That I ain't even gonna hold you. Like, not it ain't a lot there. There's things in there you can use if you actually trade like that. And it's stuff that, you know what I'm saying, I actually trade sometime where I was just telling you, hey, you can enter like this, enter like this, enter like this. But my primary way of trading is the retracement, because that's the most effective, that's the most beginner friendly way to trade the ICT concepts, waiting for the retracement back to the discount or the premium, right? But that right there, but once you get that move, right, what else can you use as backup? I mean, as stuff to let you know, okay, I can trust this, right? Balanced price range with this SIBI right here, new week opening gap, right? We've got below it, we've closed below it. We're respecting event horizon here when we trade back up into it, right? Have we taken out any sell side liquidity yet? No, we haven't taken out any sell side liquidity. So I'm still looking for reasons to sell. I'm not trying to pick a reversal, right? We ain't taking out no liquidity yet, right? Boom. We drop down to this one here, right? We trade back up to event horizon right there, right? And a old low, right? Oh, let me say this right quick. This for those who stuck around this long, right? If you notice on the PD array matrix, right? What does it say right up here at the top? Somebody read that out for me right there.
Old, high, and low.
All right. What does it say on the bottom?
Same thing.
No, it say something different. It is close, but it say
old,
low.
low, high.
Yes, there you go. Right. So when you think about the PD array matrix, right, when we're going up to a premium, right, our mind automatically thinks about, I'm going up to an old high, right? But guess what can also be a premium array? An old low. That's why Michael has an old high or low, and he has an old low or high, right? And if you look right here, right, if you look right here, you see this bearish order block right here. That bearish order, these two green candles right there, that bearish order block right there, that right there is a swing low, right? When price traded back up, right, inside this dealing range right here, right, inside this expansion leg right there, from here to there, right? Remember, we said event horizon was there because we measured that, and we're coming back up into a premium, right? When we come back up into this premium, right, what do we trade back up to? A old low right there, right? Because a old low, and we're also trading up into a what? A bearish order block, right? An old low. That's why he has it, and we're coming back up into a premium, right? And when we get up here into the premium right there, right? When we get up there into the premium, what do we have, right? We got a order block there, right? This order block right here, this would be like a propulsion block, right? And this is our actual order block right there, because this is an order block inside of an order block right there, right? We got a propulsion block right there. But as we trade up into that order block, we also trading up into that old low right there, and we never actually make it to the order block, right? Because the actual price for the order block is right there, that opening price. Yes, we have the wick. We're looking for the sensitivity inside the wick, right? But we never actually make it to the actual price of the order block, but we do make it to that old low, right? So as we're coming up the PD array matrix, right? As we're coming up the PD array matrix, we don't have a fair value gap. We don't have it. We don't, like, we look at the PD array matrix, right? As we coming up the PD array matrix, right? We don't have any of this stuff here, right? And then there is an order block there, but we don't make it to the order block, right? We don't make it to the order block, but we make it to an old low, right? Technically, we are touching the entire order block, right? We are touching the entire order block, but in the sense of, you know what I'm saying, where the order block, where the price that the algorithm refers to identify it as an order block is that opening price right there. We never make it there, right? We never make it to that opening price right there, right, on the propulsion block, but we do make it to that old low right there. So out of everything on the PD array matrix, there's no fair value gap, there's no order block, there's no, right, there's no mitigation block, there's no breaker, there's no liquidity void, there's no fair value gap. We don't make it to the order block, no rejection block, but there is an old low. So the algorithm is looking for, oh, I don't see, oh, I see an old low, boop, hit it, and then go back down, right? Coming up, get to the premium. I don't see nothing. Oh, I see an old low, boop, stop there, go back down, right? But the algorithm already know that. It already know it didn't set any of that other stuff, right? It didn't set any of the other stuff as it come back into the premium that it wants to trade to. If we go higher, yes, we do have a mitigation block above that, right? We do have an order block above that. We do have a propulsion block above that, but the algorithm is in low resistance liquidity run conditions, and it trade back to that old low, the first thing that it get to when it come into the premium and it go down. All right, that's it, man. I'm kind of tired of running my mouth. It's 8 o'clock. I don't care if y'all got more questions at this point. It'll go hold you. It'll go hold you. I said, well, y'all been typing in the chat. I just see it say I got like 28 messages in the chat. Y'all been typing. Okay. All right, man. That's it. That's all I got. Hopefully y'all found value in this. If you found value in it, share it with somebody, man. If you found value in it, share it with somebody. Now remember, there's no way for anybody to create one video that's gonna like just make you be like a prodigy or a savant, or just be, ain't nobody gonna be able to do one video that do that. This right here takes time. You have to learn it, you have to study it, then you have to internalize it. And then once you internalize it, you practice it. And once you practice it, you know what I'm saying? Because when you internalize it, you're making it like personal, like you understand it the way you understand it, not just because, oh, this how Tim see it. No, you understand it the way you understand it. You internalize it, then you start practicing it. And once you start practicing it, and you be like, man, I really can't do this, right? And then you start to, execute in the live market. But there's no one video that's gonna get you there, right? Only thing gonna get you there is hard work and time, man. I appreciate y'all for hanging out with me. That's all I got. Yeah. What's this right here? Let's see. Sunday is the first Sunday, so we're gonna have first Sunday Q&A. With the gold members, platinum members, diamond members, mentees, right? That's gonna be the first Sunday Q&A with like all the members at 7 p.m. on Sunday. And Don't forget Wednesday, the Smart Money manuscript is dropping Wednesday. Y'all enjoy y'all weekend, man. Y'all take some time away from the charts, spend time with your family. Yeah, that's all I got, man. I'll see y'all on Sunday. If you a diamond member, mentee, gold member, or platinum member, I'll see y'all Sunday at 7. Y'all enjoy y'all weekend, man. Gone.